Friday, April 17th, set the stage. For a solid month, the 10-year Treasury note has been 190. It's gotten as low as 186 and as high as 2, but it's been rattling around in that very narrow channel for a month. And as the copy nearby says, that drives all of us crazy. There's so much going on in the world with the economy, the Fed, and so on, that a stable 10-year Treasury note means that there's tension accumulating, but since it's not moving, we can't tell what kind. Today we got some flashes. The world stock market's caved in today. It started last night, started in Asia, rippled across Europe. Asian stock markets are overbought, which is a temporary thing, happens all the time. Europe is antsy because of Greece. Again, good heavens, get it over with. And then here, harder to tell. We got inflation news this morning, conceivably a little stronger than we had looked for, and yet the data pattern is weak. 10-year T-note, stocks down over 300 points on the Dow, went back down to 186, 185, 184.7, back to 186. The smartest trader I know advises that on Monday, if global stock markets continue down, then we're going to break through. We're going to go lower, and mortgage rates are going to go from 3 3/4 to testing the all-time lows around 3.5. Now, we've done this whole pattern before, in the sense of stocks fall apart, interest rates go down, and then all of a sudden the stock market turns right back around and back we go. Now, the key piece in the background, we've had a decline in long-term interest rates that's now 16 months old, in a straight line, gradual but straight line. And that's a very long straight line without a break. And we're now at a mathematical point where the straight line comes down and flattens out. If it doesn't go down again, then we've broken a trend that's almost 1.5 years long. And if we don't break it, we don't break 186, and the perception is the Fed is still coming, then we may have a fairly violent pop upward. Now, that's the standard on the one hand, and on the other hand, that led Harry Truman one day to wish for a one-armed economist. I think the stage is set for lower. The economic data this week, taken as a group, is weaker than anybody thought. Everybody knew that the January, February, March were weak, as they have been 5 of the last 6 years. And then we've rebounded into a much stronger spring and summer. There isn't any rebound in sight here in the second half of April. The incoming data is still weak. So good news, maybe we test the record lows, maybe 3.5. The bad news is we're going to do it because the economy's not so hot. Good weekend.